Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, August 9th, 2022. Interesting day. The markets started off on the downside this morning after overnight beginning to drop. And that was just in response. We dropped yesterday. And so I think it was just a response to a continuation of that drop as things get repriced. And with NVIDIA's news, the stock got hit again today. And it spread. AMD got hit pretty hard today. Intel, it came down, but it doesn't suffer as hard. But Micron also got hit pretty hard. So here in the S&P, it is beginning to look as if the 4188 high looks to possibly and more than likely completed the small fifth wave, the C wave, the minor two, or the minor C wave. So it completed 1, 2, 3, 4, 5 for wave C, but it's a minor C wave, and then intermediate A of primary B. So again, running them in conjunction and right next to one another. So running them in parallel with each other. So what is going on? Let's take a peek. As I left off last night, I'm going to drop really down to the hourly chart, because that's where I need to hone in on all of this and bring this back together a little bit to make so we can see it. So I had mentioned last night on the update that if indeed the highs are in and the market begins to turn, what I am looking for to give me some stronger confirmation that those highs are definitely in and that we are now heading into the next sequences. And that's either going to be an intermediate B wave and or a minor third wave. So the difference of those two are going to be the minor third wave would be required to go to a new low below 3639. And an intermediate B wave would not be expected to make a new low below 3639. So, but we're going to have to run them in parallel for quite some time until one will eventually take over and leave the other to fall off. And that's a little bit out there. In any case, what I'm now seeing that we did today is that it's very possible that we have done 5 down, and I'll show you. If I label this as 1, and I label this as 2, and that's 1, 2, and that's a 3 and a 4 and a 5, kind of sloppy, but still acceptable. And then we're in a small recovery rally, a second wave, and then we would drop in a third. Or this is a 4, and we still have that 5 to do. We get down to here, get under 4,100, put that in, and then put in that slightly little bit larger recovery rally, but not to really exceed likely the 50s and some of the moving averages. Now, either case, I think a lot will hedge on tomorrow's CPI number. Now, just kind of, that's talking market there and technicals. I want to kind of just say that what the expectations would be. Here is the 4125, basically at the money for actually 4130. And so if you can look and see that this straddle is really trading at $50. $50. It's like, wow. Where here, same. So it's really kind of interesting that there's a lot of volatility in this. And it's really kind of on that build up to that CPI number. And in a discussion with a friend, I basically was saying that, that makes sense to me, because it wouldn't surprise me that if the CPI number, however it comes out, that the first reaction is they'll buy it. because the narrative that's being spun and passed out there is bad news is good news. We've bottomed. Go ahead and buy. And don't worry about the interest rates. The Fed's going to turn dovish. They're going to kind of back off, relax a little bit. None of that is coming from the Fed. None of that is apparent in any statements made by Fed governors. None of that is evident through the figures. None of that it would be evident as to happening after last Friday's employment situation report, which came in way above expectations. And while a solid start to getting people back to work, increasing the tax base versus a bunch of people tapping into resources to continue their lives. So while that may seem bullish, it's not. It's inflationary and therefore not going to be well received. So, and it wasn't. But the spin hasn't stopped and the seeds have been planted. So no matter what, I think we're going to get a solid big reaction tomorrow out of that CPI number. First of all, if it comes in anywhere better, this thing is off to the moon. So bear all of this in mind. And that's why I think we only fall for so far. And then you see they're going to cover all their shorts going into the close. And then after the close, that hour after the close, which just finished, you see the institutions coming in as buyers. They're going to buy it, they're going to buy it, they're going to buy it. So tomorrow we got CPI. We're going to let the number be the number. But the way that the S&P is constructed right now, it appears that we may get a quick swing lower, a break below 4,100, possibly continuation. So in other words, it just keeps going if it's severe enough. And then we're getting our confirmation that the highs are likely in for now, and we're going to start heading lower. Now, on that basis, folks, then what I want to put in are two Fibonacci levels. One are the extensions, and those extensions would be for wave 3. And I'm going to put that there. And now I'm just going to open this up, and I'm going to make sure that I have all my numbers right, or they're at least in the hood. And this high is 46.31. So, pretty good. Not too bad. 46.31. And this high is 41.88 because we just did it. 41.88. And that midpoint is 36.39. Hey, not bad. The anchors worked for a change. Okay. So I'm going to hit OK on that. And now we are in place. So this would be measurements for a minor third wave. And you could see that expectations would be, and the requirement would be that it has to break, it will break 36.39, which is the existing low out of this declining sequence. So with that in mind, here are some markers for tomorrow. We have the daily 8 at 41.15. Then we have the daily 20 at 40.39, the daily 50 at 4,008, and that the EMA and the SMA is at 39.49. Now, could the market drop 150 points? Could it? Yes, it could. Would that be something I'd be looking for? Not necessarily. But it most definitely can. But a 50-point swing is being priced in to those options. So it's going to be interesting to see what happens. How do we want to trade it? Each of us has to have our own strategy and our own risk profile. Again, what I think we might see is we're going to get a reaction in either direction. A reaction higher, even if it zips up to 45 or 50 or 41.50, it may just still be a small wave 2. This is a 1, a 2, a 3, a 4, and a 5. And I put a 1, and then I get a 2. Okay. So 188 to 112, that's going to be 66 points. If we come up 30, that brings us up to the 50. And that's off the low. If we go up 30 from here, that brings us up to 59. That's just going to be probably 618. I'm going to give you of the whole thing. So yes, both possible, and then another swing lower. Now, if it just goes down from here, then we're looking at 4108 and a little bit below. If it's going to do that same 50. Either way, I think if we come down, if this is a 4 and now we're going to come in a 5 to complete the first 5 down, then I'm still going to be looking for a wave 2 rally. Now, what I got to pay attention to is if this is the small wave 2 or they do it up overnight, they get us up to here or even up to here, and then it turns, well, we're going to start breaking down, and then we'll be in that other pattern. We're putting in 5 more, 5 down. So paying attention to trading is going to be important in terms of what we can expect coming off or going up. Now, they decide they love this and we're going to start running it. So again, from the close at 41.29, up 50 from there is 79. We're all the way up here. We're all the way up here. We might as well just run it back above 41.88 and finish this damn thing, go to 4,200 and call it a day. Now, am I saying that that's what's going to happen? No. Is it possible? Yes. How do you want to trade it? I'll follow the price action. It'll be quick, it'll be vicious, and you jump in. If that's not your style, you wait. You wait till it becomes clear to you what direction and how you want to trade it. So, on that basis, upside, you look for it to start to break back above, stay above all of the moving averages, at least on the 4-hour, and on the going down to back to that hourly chart. Let's play it fairly. On the hourly chart, is going to stay above the 8 and the 4. It's going to move back above the 20, move back above both the 50s, and keep on going. Moving above the 50s, which are pretty flat and still kind of providing that resistance right now. A move above it will change the picture and likely bring in a flood of buyers to continue to push. All right. So, and downside, same deal. They're just going to push. It'll go through here, and then you're out looking at our support zones. And those are going to be on the daily. So you get the daily 8, the daily 20, the daily 50s, all in there. And then these starting to break below those, lining up as if 200, 50, 20, 8, 4, all in alignment. Got a little bit disjointed here. They will get back in alignment if the move is heading that direction. All right, I'm going to leave it there. Remember, tomorrow, pre-market, 8:30 Eastern, 5:30 Pacific, CPI. And we'll go from there. And the next update will be on Wednesday, August 10th.